will be an amount of 438,750. Okay, now you need to include your total. Remember, this total relates to your aircraft. Guys, remember, I'm going to repeat this. This total relates to your aircraft, and this is the total that you will transfer to your PPE note. Therefore, the total of our cost will be the 6,550,000. Our total accumulated depreciation will be an amount of 2,215,000. Immediately, I will transfer this to my PPE note. I've transferred the totals now, guys. Indicate to your market 2,215,000. I'm going to reference this my calculation 11 for my market to be able to follow. You look at this calculation 11. I'm pretty sure that my marker will be able to identify, as I have indicated that this is my aircraft calculations. Then I need to calculate the total of my depreciation. Depreciation, let's call this calculation 12, and this will be the 527,250. We need to transfer this. Depreciation calculation 12, 527,250. You are now able to include your carrying amount at the end, guys. But guys, I want to indicate to you that that's 4,163,583 agrees to this 4,163,583. Great. Now we are able to take off our aircraft, the inspection costs. Let's move on to our hangar. Great. We have identified during our reading time that they've indicated to us that they've paid a deposit of 250,000 on 1 August. The total architect's fees is 155,000, and the remaining amount will be paid 30 November. Therefore, we have identified that we need to calculate a present value. Now, guys, think, how are you going to perform these calculations? On a new page, guys, calculation number 13 in terms of my hangar. Okay, so I know that I have already paid my deposit, and this will be the 25,000. On the remaining value, which is the future value that will be paid in November, and this is 130,000, guys. This is 30 November. Therefore, we are looking at August, September, October, November. Guys, let me just quickly ensure that I understand the details. 1 August. Okay? Therefore, my period will be 4 months. The rate will be the 9% provided to me, but remember, I have a shop. Therefore, if my period is in months, my rate should be in months. Therefore, 9% divided by 12. And this will be 0.75. And my present value, which I will capitalize, will be an amount of 126,172. When we refer back to our given information, we are able to tick off the first section of the paragraph, 2.2, the following additional expenses. We have already identified that we can capitalize our 80,000 and we need to capitalize the 650,000. Guys, cost of opening the new hangar? No. You can refer to paragraph 16 to 17. Admin costs? No. You cannot capitalize this. And then they've indicated to us that the hangar was not yet available for use. Therefore, we know we will not depreciate. Now let's transfer our 80,000 and 650,000. Therefore, plus 80,000 plus 650,000, and our total costs to capitalize will be an amount of 881,172. Again, guys, let's immediately transfer this to our PPE note. Calculation 13. 881 172. Refer back to our given information and we are able to tick off 2.2, 2.3, no depreciation, and 2.4 cost model. Now, our landing strip. Now, this is an important one. Why? Because we need to account for our IFRS 1 provision. Landing strip. During our reading time, we have identified that the landing strip was available for use as intended by management on 31 December 2016. Construction costs 8 million and useful life 20 years. Therefore, guys, new calculation 14, my landing strip. I've included a timeline for explanation purposes. Remember, we need to prepare our PPE note for 20.18. Therefore, when you look at this timeline for this yellow section, guys, we need to determine our depreciation. But to be able to do this, we have identified that there is IFRS 1 costs that we need to capitalize on 31 December 20.16, our initial recognition period. Okay, now first thing, guys, when we look at the information provided, the dismantling costs on 31 December 20.16, guys, at the end of the useful life is 1.5 million. Therefore, we need to determine what is the value on 31 December 20.16, the present value, based on a 9% dismantling cost pre-tax discount rate. Okay? Now, on our calculation, we know our future value will be the 1.5 million. We need to determine what is the present value now. Therefore, N is 20 years and our interest rate is 9% per year. Important, guys. Period is in years. My rate is in years. Therefore, my present value on 31 December 20.16 will be an amount of 267,646. Okay. Are you guys with me? Therefore, my cost will be the 8 million plus the 267,646, and we need to transfer this to my PPE note. I'm going to call this my calculation 14.1. I need to indicate to my marker where did I calculate my IFRS 1 costs. Let's transfer this. Calculation 14.1. Now I need to determine what is the accumulated depreciation. When you look at my timeline, guys, what is the accumulated depreciation for 20.17? Remember, I need this on my PPE note. How do I do this? I need to make use of my cost, which is the 8.267464. I'm going to call this calculation 14.2. Look at the bottom, guys, left side of your screen. 8267646. Divide this by the 20 years, and this will be an amount of 413382. And let's transfer this. Calculation 14.2. Okay, so guys, now when you look at my timeline, if I need to determine what is the depreciation for 20.18, guys, do I take into account my new IFRS 1 costs? No, why not? because the costs were estimated at the end of the year. This is the value at the end of our 20 years, but it was estimated at the end of 20.18. Therefore, this will not influence my current year's depreciation. Guys, you need to compare this for me to our calculation in terms of our residual value and our useful life. Remember, when you look at the residual value change and useful life, this had an impact on our current year's depreciation. Okay? But when you look at our IFRS 1 costs, remember, this value was estimated at the end of 20.18, but this relates to a value at the end of the useful life. Okay? Therefore, our depreciation will remain to be the 413,382 in terms of our current year. I'm looking for my column and my line. Sorry guys. 413,382. Again guys, 14,2, my calculation reference. Now, we need to determine what is the change in our dismantling costs. When you look at the given scenario, we are able to tick off 3.1, 3.2, 3.3. They indicate to us that the amount is now 1.3 million at the end of the useful life. Therefore, we need to determine what is the present value on 31 December 20.18. I'm going to reference this calculation 14.3. My future value will be an amount of 1.3 million. My rate will be the 9% provided. Sorry guys, not period. My period will be 18. I will discuss this just now. My rate will be 9%. Now my period, when you look at the timeline, 20 years on 31 December 20.16, 19 years remaining 20.17, 18 years remaining 20.18. Therefore, my period will be 18 years and my present value will be an amount of 275,592. Now, this will be my new value. Okay? Now, we need to account for the difference, the old versus the new. We need to determine what is the old value at the end of 20.18. Now, you are able to use your financial calculator, guys. You can press 1 amort for the 20.17 period, 2 amort for the 20.18 period. Indicate to your marker that this is how you've calculated it, guys. Remember, you need to indicate all of the steps to your marker. And when you press 2 amort function, the balancing amount, your total will be an amount of 317,991. Therefore, this will be the value of your old IFRS 1 costs at the end of 20.18, 317,991. Guys, if you're not sure, you need to refer back to our PPE lecture examples, please. The difference between our old and our new will therefore be 317,991 minus the 275,592. And this will be a decrease of 42399. A decrease, therefore you will have to debit your provision and credit your PPE. Let's transfer this. Dismantling costs decrease 42399, and this is calculation 14.3, and our total will be 7398482. Guys, when you refer back to the given information, we are able to tick off 3.3 and 3.4 relates to the cost model that need to be applied. Therefore, we have now completed our PPE note.